5 o'clock in London, it's 12 o'clock in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream, Series 35, episode number 3. That, in the aggregate, makes for the last of the Lewis Stanley BRM Formula One cars. Episode number 207 starts here. And lo, the Senate has banned prediction markets for those who are on the Hill. But Nancy Pelosi's ice cream fridge will remain full as the political class can still trade stocks with abandon. Elsewhere, the deregulatory moment, which will be mourned by analysts but ought to delight all corporates and help encourage more US listings, the SEC is proposing, finally, to eliminate quarterly reporting requirements for public companies. Will the buy-side bully for transparency, or will the long-term will of the little discussed nowadays long-term stock exchange actually prevail? Of course, there was probably a prediction market for all of this, which leads us elegantly to our panel discussion today. We are looking at prediction markets and more with our panel of Mark Bettis, Anne Berg, and Dan Davis. Mark Bettis recently retired from SIBO, having been a co-founder of BIDS. Mark has a lengthy pedigree at the nexus of technology, product development, and markets. Anne Berg is a leading expert in commodities, commodity futures, and food security issues. She's a former grain exporter, a futures trader, and CBOT director. Daniel Davis, meanwhile, leads the sales and marketing efforts at Connemara Technologies, themselves probably the leaders in providing the technology to the prediction markets of the day. So, guys, there's been an incredible amount happening since we last got together a couple of months ago. And I suppose, the Straits of Hormuz and all that is certainly one of them. But prediction markets, it's fascinating to look at where they've gone, where they've come to, and suddenly having been, good grief, all those 3 decades ago, looking at prediction markets when nobody wanted to pay attention. It's all rather exploded, hasn't it? But at the same time, it seems to be having issues. Mark, greetings. Welcome back. Lovely to have you in the show. What do you think of the current state of the prediction market environment?
Well, I wouldn't have predicted that it would turn out this way. It's been a long time coming, and we've been talking about this for years, and you've actually done it, right? I used InTrade back in the day when that was going, and it was great. And in fact, that model that InTrade adopted was closer to, I think, what one's ideal would be in terms of the types of contracts that were traded there. So, yeah, the surprise of all this, I think, is the way in which it's become, and I guess you shouldn't be surprised given the way everything else has gone with Robinhood and everything, how it's really kind of turned into a casino-like operation. And it's great that you've got retail participation in these things. That's always good. But the way in which, the sports events have dominated the Kalshi thing, that whole Kalshi market is out of the blue, really. To have sports betting as the kind of core of that was a real surprise. And so I guess, from my idealistic viewpoint, where I always thought the predictions markets would be, the great thing about them was that they're a real public good, that they would do so much to improve the quality of information available to the general public, the investing public, politicians, punters, everybody everywhere. And to be fair, which I'll come to in a second, I think it's beginning to fulfill that role as well. But the distractions, I think, of these other contracts that have been introduced and the way in which they're traded and the way in which they've managed, there've been a couple of scandals already with as we know, with military betting on the outcomes of wars and deaths of dictators and this sort of thing. So it's got its teething troubles, and I guess you could argue, well, on balance, it's maybe worked out not so bad. But my worry about it in the context of the US is that these problems will become political. And, you could end up damaging the whole model if they're not very careful about how it gets regulated. I think most of the people on your panels, Patrick, are pretty free market oriented, and we welcome the sort of relatively light touch and open-mindedness of the CFTC and the regulators generally around all of this. But I think caution is appropriate. I would hate to see this model actually fail because of those potential political problems and even ethical problems, I guess you could say. So, that's my initial thought on it. Just one last thing before I hand over. I would say, the upside of it is that some of the contracts are trading extremely well and are already providing very useful information. I believe even the Fed now actually is kind of, has a ticket in there to monitor the key metrics that are coming out of the predictions markets, and are using that for their guidance, hopefully in a productive and constructive way. So that's a good sign, and I'm sure that's happening, in many other areas as well. So a mixed bag is where we are right now, in my opinion.
Yes, Jim Serebietsky, that book, The Wisdom of Crowds, springs to mind here. And of course, what was it? The Economist back in the day in DARPA, I mean, good grief, that's 20 years ago, after Intrade, they wanted to create, if you remember, a prediction market because they thought it would be the best source of information for government. It's quite fascinating. Dan, I mean, you're at the forefront of actually delivering software and innovative solutions to several of the most exciting markets around. Not all of them have launched yet. What's your experience with trying to push back this very, very exciting and fast developing frontier of the market space?
Yeah, great to be on the show, Patrick. I think when it comes to prediction markets or any new asset burgeoning venue, it's not a technology problem anymore. With our platform, we think that you can launch any venue. You could be trading prediction markets. You could be trading jelly beans. It really doesn't matter. We have customers that are trading perpetual futures on compute. Not in the US. I mean, some of this is still a legal gray area, much like prediction markets. But I agree with Mark. I mean, there does need to be strong guidance from regulators and collaboration between market operators and regulators and what that looks like. But you got to be very cognizant of also the players that are in this space. Not all news is real news, and there are there's a very big faction for online sports betting that does want to sully the reputation of prediction markets and stop it from advancing. So I think that's also something that it does make it more political, to Mark's point, and it would be as somebody that is a big evangelist of free markets and price transparency and price discovery, I think it would be a shame if this did go to the Supreme Court or became more political and wasn't able to advance as a result of that.
Yeah, it's very interesting. I mean, you're talking about the interests, and I think you really hit the nail on the head there in one area, Dan, because you've got all of these states in the USA have suddenly woken up and gone, prediction markets are terrible. And it seems to me the parenthesis is prediction markets are terrible because we own the state betting monopoly, and therefore we're suddenly losing tax dollars. And I mean, that seems to me to be a huge issue. To take an example, New York State with off-track betting and all those stores that they have sitting around the center everywhere, Manhattan, Brooklyn, and all of the other boroughs. And therefore, there does seem to me to be a certain degree of hypocrisy that suddenly this is horribly evil when the private sector is doing it. But it was perfectly all right to do it in corner shops for decades on end when you were offering it and people were effectively paying some degree of tax to the government indirectly or directly. So there is a very interesting point there, which I think is something that's not really being, well, certainly the media are struggling with, I think, and definitely a lot of the certain American media organs like NPR seem to be just determined to try and diss prediction markets without understanding what's going on. But I mean, Anne, the regulatory framework, the holistic thinking, you've done a great deal of work holistically thinking about how to develop markets and commodities and so on. One thing worries me is the lack of, it seems to me, broad, big picture thinking in how a lot of these markets have actually come to life. Do you think that's reasonable?
No, I totally agree with you. Thanks for having me on, Patrick. In fact, I agree with all of the, just about all of the statements that have been made here on your show here. From my standpoint, you've got two issues or disputes, you might call them. And one is jurisdictional. You have the CFTC who's suing the state of Illinois, that's my home state, to assert its authority over the markets, which they call, CFTC calls these bets the equivalent of swaps, which in a sense they are. I think it's actually almost better to think of them as out of the money calls and out of the money puts with a strike price, in the middle of it. So that's going to be, I think, a long-term problem, because you've got a federal government agency that's suing the various states. I think Arizona is another one. There's probably another couple. So this is and while the other problem or dispute that I see would be, which would refer to what you're talking about, Patrick, is definitional. And what we're seeing is a rush by Congress to put in all sorts of insider trading bans on these prediction markets. So they're borrowing a concept from the securities markets, which really doesn't exist in futures markets and commodity markets. So an insider is somebody in securities that is really a fiduciary and owes a duty to the shareholders, where you don't have fiduciaries in commodity markets. So, you have informed traders and uninformed traders, basically. There was an attempt back in the 90s to basically shut down information that was flowing back and forth in the cash markets. And my firm that I was clearing through actually went to Congress with farmers to testify, say, look, this will just kill us. We won't have any information on the cash market in order to inform our selling decisions. So, this is a problem that if not carefully considered, with a big picture analysis, you could suddenly have all sorts of classes of traders that are being banned from trading in the futures and options and prediction markets, which again are Wall Street Journal just had a editorial to say, yes, this really is betting and gambling. So what I fear is that something might spill over into these markets that, and I think this is expressed by Mark and also by Dan, to say that, you can't trade these markets. If one class of traders can't trade, they could it'd be regulatory creep into the whole field. So that's pretty much how I look at the situation right now.
Yeah. I mean, it's very interesting, as you say, because the whole problem we've got is suddenly insider trading has been defined as something that's wildly important. Equally, definitionally, a lot of people don't seem to have learned anything, even all the way back to the 18th century. Because, in the 1720s, after the South Sea Bubble, as I may have mentioned before, famously, the UK government banned the ability to buy life insurance policies on third parties, which was effectively a piece of key insider trading, because I was walking down the street and saw someone, none of the panelists today obviously, saw a person, let's call them Eric, and I would see Eric, and Eric would be coughing, and I think Eric doesn't look too good. I'd instantly rush out, buy a life insurance policy, and effectively, because they were even in those days offering you a certain period of cover for free before you had to pay too much premium, getting a leveraged bet on the longevity of Eric. And this was particularly popular during the South Sea Bubble, actually, and thereafter was banned. So, I mean, a lot of these issues have been around for centuries, and particularly one thing that struck me was how poorly certain markets had defined regime change versus death versus other issues, given the fact that actually, to be fair to Trade Sports In Trade that I was a co-founder of way back in the day, I think the guys had done a very, very good job of defining those out of the original Betfair. I mean, Dan, it's interesting. You say, yeah, everything is code, so therefore you're kind of agnostic as to what it is that people are putting onto those markets. But tell me something. I mean, obviously, there must be a great deal of optimism flowing through the prediction markets at the moment, because the volume has just grown from nothing. I mean, literally like 100 million a month to something like 13 billion a month in the course of the last year alone. Are you seeing an uptick in the number of new markets being devised, or is it simply the existing markets are looking to take more and more of a bigger pie?
Yeah, it's an interesting question. I did maybe disparagingly talk about sports betting or their interest, at least competing with prediction markets. But we have seen many of them actually capitulate or, kind of cross the line and enter the prediction market space. And I think what's really unique about the online sports books or daily fantasy players or sweepstakes players that have come into this space is they do have very innovative technology on the front end when it comes to the UI or the UX. You look at companies like Underdog or Novig or ProfitX or some of the the new entrants from the sportsbook or daily fantasy space are doing, and it is innovative. It's a user experience where people want to participate in their personal economy, and that a lot of times that is maybe sports. I think as we see more of these OSBs or daily fantasy players, come in, we're just going to see more innovative ways to trade. Certainly have seen that in a big way in terms of what we historically would call user-defined instruments, or now being called combos, parlays. That is driving a lot more volume at Kalshi. I think you also got to be cognizant. Volume on an exchange is different than handle at a sports book. So there's a lot of semantics like that where it's maybe a bit of a translation that needs to happen. But you've seen a tremendous amount of volume coming from combos on Kalshi lately, and I would expect that you'd see that at just about any prediction market.
Yeah, it's very interesting. The combos and parlays and so on is quite fascinating because, Anne, you and I have been discussing this offline. A lot of also the product that you're seeing in prediction markets, it's really just the same old product being sliced and diced to be delivered to a kind of new marketplace in a slightly new wrapper, isn't it?
You're talking about, it's almost like options on commodities, you mean?
Yeah.
Well, that's what I see. You've got you had predictions in the crude oil market that would have essentially at the money strike price, and then above that are percentages to buy a bet on oil going, for example, to $120, 25 cents, and then $130 at 10 cents, and 150 at 3 cents or something like that. It's like a cabinet quote in the options market. So, and the same with the puts on the way down that go from being at the money to increasingly out of the money as they decline. So yeah, it's a new way of looking at it, but this is where the big fight is between the CFTC, I think, and some of these states to say, well, this is where we have our authority, and then it creeps into, as to where is their authority, and maybe it creeps into other sectors as well. I don't know. It's just beginning. If these lawsuits have begun. And as you say, there's state revenue, state taxation, that it's going to be a big fight. That's all I can say. Because when we take away taxation from the betting markets, state betting markets, and put them into the prediction or event markets, that's quite a change.
Dan, sorry, I think you were trying to say something, were you? Or was it Mark?
Well, no, I hear Ann saying that, and it's funny. I think I saw comments from the American Gaming Association CEO say that this is maybe misrepresented as a kind of a taxi medallion versus Uber type of fight. Thank you for him giving us that analogy, because I think it actually is more right than maybe he leads on. Losing a lot of in terms of revenue, or this sort of medallion that you have as a taxi really does seem very similar to a state gaming license versus having a federal license where you're able to have these products all over the country.
Yes, and again, it's that issue of governments wanting to have their taxation monopoly. Mark, you're sitting above the USA, looking down from Canada. What are the kind of dynamics about this market in Canada compared to the USA?
Well, I'm not even allowed to use the US predictions markets. The Canadian government doesn't think I ought to be using them. So I'd love to give it a go and get some perspective on it as an actual user. But this is an interesting point about how do non-US jurisdictions view this? Not just Canada, but I see Australia is now looking at putting something together and building a predictions market, and it struck me that actually this is an interesting issue, because I think many of the contracts that people want to trade are going to work best as global contracts. If you're talking about sort of international events or things like anything related to commodities or to the exchange rates or things that have an effect on the global stage. The fact that non-US citizens, for the most part, unless, you can buy VPN, you can use your VPN and sneak in that way. But frankly, that's not the ideal way to look at all of this. The fact that it's not truly global yet is disappointing, and it makes me wonder about how these contracts should evolve over time. Eventually, I'm sure Canada, Australia, Europe, all these places will have their own versions of these predictions markets. But if you think about how they're going to work best, if I come back to the the public good element of this, that using markets as a form of information discovery, they're going to work best if there's a big degree of fungibility between them. One of the criticisms of predictions markets so far has been that although you've got a lot of contracts, the liquidity in them can sometimes be a bit tame. So there aren't enough counterparties for you to trade with to make the prediction interesting. So if you seriously wanted to hedge against an event that affects your business, say, and you find that you can only hedge $5,000 worth of the risk, that makes the whole thing much less attractive, unlike the mature commodities markets, for to pick the obvious example. So the more you can get fungibility, the more that the international market can participate in this, and therefore build something that's truly useful on a global scale. My worry for a predictions market in a smaller market like Australia or Canada would be that lack of liquidity would just make it not as interesting. Now, counter to that, I think, is the fact that, as Dan was saying, the technology behind all of this is probably evolving at an incredible rate. I mean, not probably, we know it is, especially with AI and everything. So actually the ability of market makers or professional participants to provide liquidity to predictions markets may well address that problem at the same time. So it's absolutely amazing to see all the dynamics going on with this at the moment. So, like I said, on the one hand, there's the question of liquidity. How do you find that for such the more obscure contracts? On the other hand, you've got potential liquidity providers, and it's now Susquehanna, Jane Street, those people are now getting into it and finding ways to provide liquidity to those markets. So it's not going to be boring, that's for sure. It's going to get really interesting as it evolves. And do you think we'll get to a stage where someone will invent something like payment for order flow, Mark, for prediction markets? Prediction for order flow, maybe they would call it. Yeah. Well, that's another topic. I'm not as against that as a lot of people are. I personally think payment for order flow has its merits. When something becomes very liquid, and that's the irony, is that the market makers compete very, very aggressively for that order flow. So yeah, you can see that happening, especially on some of the more tradable, hedgeable contracts. I think these things like they have this on Kalshi. They have this mention contract, where will some famous celebrity mention something in some speech or other, which is totally unmanageable from a risk perspective. And so how do you bring in market makers into that? And yet, even there, I was saying there's a very good article in the Wall Street Journal just, I think, the other day on this. They've gone through it. Even there, the sort of professionals in this game are now able to actually say, well, actually certain bets, people always bet them wrong. 2/3 of the time they bet yes on some celebrity event like that, just because they want it to happen. And so that becomes then a piece of tradable risk management in there. It's which is, actually goes back to, yes, will it snow at Christmas, which has always been the thing that gets huge amounts of bets all of the time in the traditional UK bookmakers, because everybody with kids was really hoping they were going to get a white Christmas, because then it made things much, made the whole Christmas experience that much better. It is interesting. I mean, how it exposes the human biases in what goes on inherently. And
I would also point out you can only buy yes contracts on some exchanges, like ForecastX. You can only buy a yes contract. So you're either buying a yes or buying a no, or I guess you're buying yeses or I guess you can only do buys. I'm sorry, not just yeses, but I think there is a certain bias towards yes. I did want to just step in and say, Mark, you can get some access to prediction markets through IBKR or through ForecastX is exchanged through IBKR. I don't think you can trade like elections or certain contracts, but not sure if you've tried that out yet.
Yeah, I did. Actually, I have an IBKR account, and I did buy literally one contract the other day, just to try it out. But you're right. They didn't have much in the way of what I would find interesting, which would be more, the economic and political bets. This was on Bitcoin, which I placed the bet on. Will Bitcoin drop below $60,000 or something like that? I can't even remember what it was. But it wasn't that interesting. But, that's true. I mean, I'm glad that IBKR is doing that. That's great. And I hope they're successful with it. That'll be another way in. And I quite like their contract, actually. It's quite well designed. It just hasn't really got any it hasn't made an impact yet, has it?
Yeah, that fungibility piece is really interesting because that's, that specific contract you just mentioned might be more fungible than others, like a mentioned market. But if it's not 100% fungible, then there is, some level of risk. I think that might be actually a challenge for AI to take on, to at least do some sort of risk management with how similar, how fungible contracts are for market makers. And I'd also, mention that market makers are becoming more retail. I talked to a group of college students a couple of weeks ago that said they're a top 10 market maker on Kalshi that had vibe coded their fixed gateway, which was a new one for me.
That's certainly an interesting way to get a new kind of floor dynamic. You can go from being a very small enterprise on the prediction markets and presumably eventually make it into the big league or something like that. But I mean, it is interesting also, you mentioned these sort of things, will Bitcoin hit 60,000? So essentially you've got like touch options, which were exotic options only a matter of a few years ago that regulators were warning against retail ever being allowed to, touch. And here they are now writ large for everybody to have a play on. It's quite fascinating. Do you think, Anne, that the CFTC really are going to succeed in managing to make sure that they have the mandate for the prediction markets, or do you think this is all going to get bogged down?
Boy, I don't know. I think this could go to the Supreme Court, frankly. It just is to say there's too much money involved. And if Governor Pritzker here in Illinois sees his tax revenues dropping, he's really going to fight for it or fight against the lawsuit. So I don't know. And I'm not a lawyer, so I can't really, touch upon the legal arguments. It just seems from a common sense point is that both the state and the federal government are making points. So I don't know how this is going to finally turn out.
No, it is very interesting. And certainly, I suppose the other thing that intrigues me is this going to be a situation where actually, because there are prediction markets, that the overall market volume is going to grow? Because certainly the more competing stock platforms we seem to have got into the USA, or the more competing options platforms, where are we at now? 18.
There's an arbitrage. There certainly has to be an arbitrage between the prediction markets and the standard legacy options markets. So I don't know what that is because it's hard to get options unless you pay for them. But there certainly would necessarily have to be arbitrage opportunities between all of these various markets, and that always spurs the volume. What I think one of the interesting things is that Mike Selig, who's the new CFTC chair, announced he had a very short announcement. I think you included in your Exchange Invest newsletter to say that this was the end of the end of the enforcement era, and yet he's going after whether it's going to be insider trading or in this case with the states. So the legal battles I think are only increasing.
Yes,
I
it
think
seems we're back to you. Go ahead, sorry, Mark.
Yeah, I think there's a couple of points interesting there. So many dimensions to this topic. It's incredible. But I think you talk of the liquidity potential, and as Anne and Dan have mentioned on the ability of the potential for arbitrage that exists because of AI and the way that whole machine learning and neural network risk management capability is now broadening. I think the liquidity problem actually eventually goes away because so much of it can be automated that you could get even a relatively obscure contract where 1,000 bots would be quite happy to give you a two-sided quote on it all day long, even though it's something that's only of interest to a small number of people, and the ability for ordinary investors to, it can't be very long before you as a retail investor can go in and trade an AI-driven process, for yourself, for your own account, with your own rules that are fed into it. So the ability to trade and manage the risk of that just extends. So liquidity just grows and grows. And I think that's where, it's already happened, hasn't it? Liquidity just every year it goes up. You look at the derivatives exchanges, their volumes never seem to decline. And it's driven by that tech capability. So I think, I was worried earlier, about the fungibility of some of these contracts. But if there is a huge degree of arbitrage potential in there, which I think there is, then the fungibility problem even goes away. And Australia can have its own little, Fed contract that's only tradable in Australia, but it's still liquid enough because it can be hedged against the real Fed contract that's trading in the US. So once again, technology is driving the whole thing.
Well, I think also, besides technology, we have a prosperous society, and this sort of proliferation of traders, I think it's mostly a bro culture. I could be wrong on that, but the idea that you would have this type of culture that is so into trading and betting and so on, let's say pre-World War II, I think it's inconceivable.
Yeah. No, that's very true. Very true.
Well, certainly it's a long way from the 1930s where, one had to write a letter to one's bookmaker in order to manage to place a bet from a Mayfair club. Definitely the straight-through processing has improved somewhat during that course of time, Dan, down to a remarkably low latency equivalence. So, just, rounding out the prediction market topic for now, Dan, do you see any particularly exciting trends that are coming before you? And do you actually see the somebody out there trying to do the global market, which I think is going to be very, very important to try and get all things into the same pricing picture?
I think we've kind of been dancing around it, but AI is either a way to drive liquidity or a way to offer better risk management tooling for traders. I think it's really interesting. I think this whole concept of just collateralization or cross-margining across exchanges is really interesting. Probably not something we would do as a company, more of like an FCM or FCM type of technology provider would be doing more of that cross-collateralization or just the margining. We've seen Kalshi has this entity now called Kinetic Markets that they plan to offer margin through, probably for like select amount of customers, not all retail customers, which would be kind of madness. Eventually, I think you'll probably get to offering retail customers, margin, but I think that we're still a ways off from that. But really tools around either some of this margining or cross-collateralization, I think is going to be especially interesting the next couple of years, especially just given what we've talked about in terms of fungibility or arbitrage in traditional markets.
Very interesting. And I'm sure there will be a prediction market based around it sooner or later without any doubt whatsoever. One
thing I will say, we talked a little bit about state taxes. I don't know that anyone knows how to tax prediction markets, which is... It hasn't really gotten much airtime, but if you make money on a prediction market, how is that being taxed? And I don't know that there's been clear guidance on that. So I think that's an especially interesting topic, not getting enough airtime.
Well, one prediction which I'm 100% sure of is they'll find a way.
Let's find the highest rate,
Yeah.
and then
Yes, and the inevitability of the state will always manage to find a way to extract their taxation dollar. Yes, good point, Mark.
Well,
Very, very interesting.
People vote with their feet, They vote with their feet. So if one regime in one state is going to find a way to tax, you might see a flight of capital, and just like what we're seeing in New York City right now.
Yeah, and also then it leads to all sorts of breakdowns of issues, which is still the problem if you try to post a bottle of wine across state lines in the USA, which all seems to be a tortuous business for supposedly one unified federation of states. It is an interesting possibility as to how that's going to work. And clearly the lawyers are going to be a winner in the short to medium term, no doubt about that. I mean, let's take a little break for a second, guys. I just wanted to look at, what's been dominating the headlines, of course, has been what's happening in the Straits of Hormuz. But then at the same time, it's important to look towards the Taiwan Straits at the same time. Here is this week's Big World short video. Meanwhile, in Big World, we talked a while back about how there seem to be declining tensions overall in relation to the Taiwan Straits and China's ambitions or thoughts or considerations or what those might be of putatively invading Taiwan. Japanese Prime Minister Sanai Takaichi won a stunning majority in the Japanese elections recently, getting herself a super majority after being appointed PM of what looked to be a rather lackluster minority LDP government. Holding her strong majority, Takaichi as Prime Minister continues to concern herself with Taiwan and those perceived Chinese threats to the territory. This matters for one very, very simple reason. Post the Fukushima nuclear disaster, which saw Japan tail back on its commitment to nuclear energy, Japan relies on LNG, liquid natural gas, for around a third of its energy needs, and those must be shipped through the Taiwan Strait or parallel shipping lines. The issue is therefore an acute one for Tokyo, as supply, terminal storage, their reserves amount to just over a month's supply. So clearly, Japan is very, very self-interested in who runs Taiwan. For more in Big World, like or follow. And actually, we're recording this show this week just midway between, 1 month out from when I will be in Taiwan for the AFM annual conference. Looking forward to that one. Meanwhile, in our book of the week this week, we've been one issue that's developed within Exchange Invest is that we're now a 7-day-a-week platform. So we are offering you a free weekend edition on a Saturday and a Sunday. You can sign up for that at exchangeinvest.com. Monday through Friday, it's still the same subscriber content for Exchange Invest. You can always read that by signing up at exchangeinvest.com. We've even got a brief free trial period for you so you can manage to stay ahead of the bourse business for a number of days before you have to pay for it. Anyway, in the weekend recently, we've been talking a great deal about Coachella. Last weekend, we were talking about Coachella and crime. Something very, very interesting to look at. In fact, we're looking forward to our 13th birthday special this weekend, so you can subscribe to that. Inside Coachella is our book of the week, How a Desert Festival Became a $1 billion brand. Very, very interesting tome discussing, how what became a typing error originally has turned into its own massive ecosystem as a big weekend for influencers, for the pop bands that are involved, and indeed as a blueprint for modern entertainment itself. You can get that book via the usual suspects, Amazon et al. Links in the show notes here. And our next book of the week will be unveiled on the Saturday edition of EI Weekend. Actually, it will be unveiled on the Sunday edition of the EI Weekend. I think the show notes are out of date. Good grief. Don't forget, if you want all the skinny on the inside of the bourse business, $499 per annum to join the exchange of information. Mark, I wanted to go to something very briefly, which might actually not interest our American cousins so much, but we're recording this just at the point where the UK is having council elections, and who knows who's going to be Prime Minister by next week. The one thing that I predicted was that Keir Starmer won't last a full term in office, and I think that looks like it's certainly going to prove to be an absolutely accurate prediction. But Brexit, There's been a lot of talk recently about the fact that Brexit was an economic disaster, which in fact was one of the things that PM Starmer said recently, which rather flies in the face of the statistics. I know you've been looking at some of this data. It's incredible, actually, just how robust Brexit has been as a process for the UK, despite, in every way, what the government have managed to make of it.
Yeah, well, I mean, I think London's been, hasn't moved, right? It's still in the same place, and well before there was a European Union, it sat where it did in between time zones, and it played that with the English language advantage and all the other historical reasons why London was an important centre. It's not surprising to me anyway that it has held its own on this. And if you look at the practicalities of it all, it was interesting because when Brexit happened, I was still working with BIDS and SIBO, and we had an operation in London which covered the whole of the EU. And like as with everybody else who was in that business, everyone had to go and set up a EU office in either Dublin or Amsterdam or Paris or wherever you chose to go. But the reality was, this whole thing coincided with the onset of the Zoom generation and the working from home thing out of COVID. And so in reality, what happened was those offices became sort of two-man or two-person mailing addresses where the work continues to be done by the same people who were doing it all along, who tended to be based in London. And even those firms that tried to sort of relocate or felt they needed to relocate over the last few years have been gradually coming back to London. So I think we with our exchange focus, with this equities and equity derivatives focus, tend to think of London, at least I'm guilty of this, of London as well. It's the stock exchange and stock trading and what goes on there. But really, the fact that is declining and the LSE situation, from an IPO perspective and everything else is pretty dire. There's obviously the finance industry is way bigger than just equities. And so it's held together very well, and I think that will continue regardless, because the things that made the centre, they haven't really gone away. I mean, it's not the financial centre it was because of the EU. That's the simple reality, right?
Yeah, and even in the macroeconomy, 2015 to 2025, so pre-Brexit to clearly post-Brexit, pre-referendum, UK exports to the EU rose by more than 23%, which doesn't sound like a staggering number, but it's worth bearing in mind that 23% increase is actually 5% greater than the EU's actual GDP increase over that time. So obviously somehow or other people still want their British exports in the EU. And at the same time, a lot of talk about how Britain's trade has collapsed. And true, the European Union is no longer as important. It's now only 41% of UK exports, as opposed to 44.5% in 2014. But the point is that there's been a 23% rise in export to the EU and a 27% export rise to the rest of the world. So certainly all this talk, it seems quite incredible that we have journalists in this day and age who do not actually question the fact that the Prime Minister of the United Kingdom of Great Britain and Northern Ireland can call something an economic disaster area that flies absolutely in the face of what is the realpolitik of the data. And data, as we all know, is king in a big data world. So, team, talking about that big thing, the Iran crisis, the Hormuz, the oil markets and everything, we've been through a number of iterations in this, haven't we, over the course of the last few weeks, and actually a possible breakdown in the global oil benchmarks themselves. And it's been a particularly fascinating time for commodities.
Well, it has been. It's just been so volatile and day-to-day changes in the prices as the presiding prevalent power, the U.S. tries to make a deal that is palatable to American people with Iran. And I don't know where we are. At this point, there might be something that's brewing that's first-rate news that we don't even know about. But I think the consensus, and I would agree with this, is that things are not going to go back to normal. The fact that Iran could erupt at any one time and close the strait means that the insurance rates are going to be high, remain high. The daily charter rates and so on, which they were exploded, of course, when the strait was first closed, or even before that, when Epic Fury, I think it was called. So and you've got not just oil, but of course you've got the fertilizer that comes through there. I think it's either 25%, it might be 25% of the world seaborne fertilizers come from that, they have to go through that strait. And also aluminum that doesn't get much play, but aluminum prices are basically dependent upon the cost of smelting the bauxite ore, because the bauxite ore is very, very cheap relative to the finished aluminum. So this is another issue that is part of the maybe not unexpected outcomes, but I think they didn't get any attention until the strait was closed and this war was launched.
Yes, it's quite fascinating.
And food prices, you've brought up, food prices in your letter, so it's another issue. I'm not sure how much it's going to affect the U.S. because the fertilizer was already bought and shortly put into the fields before this problem happened. But in other areas, and also let's say South America, where it's got a completely different growing season, this might be a problem. Or the southern hemisphere, just call it in general. So it's hard for me to see an end to inflation. I just saw that gas prices were up to, I think, $4.50 at a national level, because this is all feeding through. It takes time, for these changes in crude oil prices to get into the fuel price. But what the U.S. is doing, interestingly, it did provide a record fuel and distillate exports to the world prior to this war, and now it's really increased them. But it's having to increase its imports from Canada and a few other countries in order to sustain that, which means that the price in the U.S. is still probably going to be elevated, especially in the jet fuel and gasoline prices for the summer.
And that's obviously going to be bad news, because driving season starts in a fortnight. I mean, how does that affect you, Dan? I mean, looking towards the driving season coming up in the USA, $450 for a gallon of oil.
I get 11.5 miles per gallon on my car, so I'm not looking forward to that. Luckily, I don't have to drive to work. I sit here and home most of the day. If anything, I should probably be getting out more, regardless of the price of what oil is or gas.
So my masculine intuition tells me you haven't made the switch to a hybrid yet at 11.5 miles per gallon, Dan, right?
Embarrassingly, it is a hybrid. It's the Toyota Sequoia hybrid. What is it called? Duramax engine.
Wow.
Yes, 11.5 gallons per
11.5 miles per gallon. Yeah.
Miles per gallon?
It's all city driving, so it's not really doing any highway. I think when I did a move cross country last year, I got 20 miles per gallon, which I was ecstatic about. Meanwhile, my dad's getting 45 in his electric car. So, Patrick, I don't know that I would mind getting some of that mileage back. Having a young family, need a big family hauler, a lot less options on the hybrid front.
No, I can fully understand that. That's quite incredible altogether. The one thing that I think is intriguing is we've been sitting here talking about oil for kind of 5-7 minutes, and nobody's even mentioned the fact that the UAE exited OPEC. And I mean, Mark, I can remember the day when OPEC dominated the headline news all the way through, and particularly Britain in the 1970s. I mean, OPEC was holding the UK, the US, and the world to ransom, and then the UAE go, we're leaving OPEC, and it barely seems to have mentioned more than a shrug in the world's media.
No, that's well, yeah, it is amazing. Talking of the 70s, I remember, that the impact of that was such that the conservative government shut down industry for 2 days a week. My father had had a machine tool shop which I worked in at the time, and we were supposed to only work 3 days a week and shut it down for the other 2 days. The other 2 days we turned all the lights off, and I was guarding the door looking for the police coming around and checking up if you were still running your operation. So that's my memory of OPEC.
It's quite incredible to think how far that has moved over that period of time.
It's not OPEC that's moved so much as the U.S. has just become a super producer. From being a deficit producer, where it had to import virtually all of its oil when George Bush was in power, and now it's exporting. It's producing like 13.6 or 13.7 per day, million barrels per day, and exporting up to 5. They probably can't increase much over 6 or 7 because there's just limited capacity in the Gulf. There's only one port with a big enough draft that can load these VLCCs, the very large crude carriers. And if there's, 20 some are coming here to load, it's going to take a long time. But, the U.S. has completely regained the advantage so that OPEC has decreased in its relative value.
Yes, it's quite an incredible tale of how that's changed. Of course, also, it's interesting in the moment. I mean, there's a fair amount of not just VLCCs, but other crude carriers are all stuck at the top end of the Straits of Hormuz and currently can't get out. World's biggest car parking problem for ships at the moment because they don't want to take out and find themselves with an exocet through their hull, which I can fully understand is not something that anybody wants at any juncture. On that note, it's really interesting to look at where we are in the world today. It's been fabulous to discuss prediction markets. I will predict quite happily, and this seems to be a tired trope through the show, that we will be discussing prediction markets more in the future. Who knows where the Straits of Hormuz are even by the time this show is actually live next Tuesday, where we're recording a few days in advance. It'll be interesting to see. But then again, looking at our short video today, the Taiwan Straits remind us about the energy math is not purely something that comes from the Straits of Hormuz itself. And whether or not you've been enjoying our weekend series on Coachella, whatever you think about Brexit, and the statistics show that it hasn't been anywhere like the disaster that it might be, I think it was great to hear from Dan pointing out the fact that however you look at it, the technology is leaping forward, and ultimately, whatever we seek to trade, it's just code. And also, thank you very much, Anne and Mark, for once again providing us with strong answers in favor of free markets wherever we go. And that's it from episode 207 of the IPO-VID Livestream. Thank you very much to our production team today, Natalie, Racy, and Marianne. Great to see our guests back in the studio, Anne Berg, Mark Bettis, and Dan Davis. Next week, we will be back, and we're going to have a fascinating guest. We're going to be understanding the IPO market, and that should be something to talk about, particularly in the wake of the SEC announcement of making only mandatory and not obligatory quarterly reporting moving forward. Our guest on the 19th of May at midday Eastern Time is going to be the fascinating Professor Jay Ritter, who will be coming to us, I do believe, from Florida. Ladies and gentlemen, I wish you all a great week in life and markets. Thank you very, very much once again to our panel, to Dan Davis, to Anne Berg, to Mark Bayes. And we are looking forward to the next panel in the near future. Have a great week in life and markets.